Hey everybody, it's Kimosabe here, back again with another video to update what I'm seeing. Um, Bringing this to the line chart, trying to match these patterns to see if we have a completed pattern, and I do potentially have an idea that this is a completed pattern. Um, if we match this leg with this leg, matching this leg down, this leg down, and this is where it gets kind of interesting, is this weird choppy leg can kind of match this weird choppy leg. If that's the case, then where we started over here could be completing here. Now those, if you measure these out, these legs would match one for one all the way until this current leg matches. So we have a potential for this whole pattern to finally be completed in the manner that I look at things. Now that doesn't necessarily mean it is complete. It's just this is a potential for it to be completed. And I do that on the line chart to kind of avoid all the noise that the wicks can bring. And you can see trend a lot better. You can see a lot of things better. Paying attention to this area here. And if those lows are kind of mimicking that, then this is your slight deviation, which would potentially mean that this is complete. We also do have the cycle lows that keep happening around the beginning of every month. And of course, if you follow Camel Finance, we're kind of contemplating that this is a cycle inversion, similar to how we had last year after a similar time frame of downtrend. And this could be a mid-cycle low. If that is the case, and this is going to be a mid-cycle low, we want to see a higher high come out of here before another cycle low. That could be August or October. Early October may be the higher low to buy before rip roaring out of here. Slight problem with that is we do have a slightly lower low close right here on the daily chart. It did close slightly lower, so now what we want to see out of there is some kind of bullish pattern come out of there. Either closing above here could give you the potential for a higher high from there, then look to buy the higher low and get up here, and then you would be higher up there, so maybe you get a weekly higher high there, buy the higher low, and follow trend up. Like I said in the last video, I'm not much of a knife catcher. I do have a small position down here. Stop loss is at that current low. I don't want to see it go beyond that, because if it is going beyond that, it's searching out this lower liquidity. But we'll get on the candle chart and look at what we see. So we have the August low, August 5th, and now I think this was the 6th of September low. I don't really call that a higher low just yet. It would have to confirm a higher low by closing up here maybe. But from a liquidity standpoint, that current wick, this one right here, coming back to previous support, I don't want to see that wick get broken, because if it is broken, we are going after the lower liquidity. And then instead of the bullish pattern that I would be matching this leg like this. Out of there comes this leg. That actually looks really good, because this followed into that. So this leg up is the one that comes next, so maybe we're doing that. This is totally a possibility. This would be the sell setup right into liquidity up there for another push down to mimic that leg. And then this follows. Target on that would probably be somewhere around 43,000, which a lot of people are eyeballing for potential long setups. That's totally valid. I don't see any problem with that as long as that high isn't broken. As soon as you break above 65, I think it's game over, and this should be going up to take this upper liquidity eventually. But until then, this is a valid sell setup. This is an area to take some of your profits out here and see if it comes back down and finds support around there, around previous support. So similar idea where you have the swing failure pattern that comes here, pops back up. Here's your previous support. Came back down to the previous support, getting a reaction that looks good. So you'd have the same concept playing out with this wick right here, along with this wick right there. That'll be on lower time frames, but you would have a reaction up to here, and that previous support would be the area to hold. That's actually a long setup. Stop loss would go right there. This being the sell setup, stop loss goes up there. So because there's a valid sell setup, we're likely to see some supply come into there, which is the liquidity that I'm targeting anyway. So you target this liquidity, stop those out, and maybe reverse back down, or it holds support and breaks again. So if supply does come in here and it pushes down and breaks above again, it's likely targeting this liquidity. And like I said, if that one breaks, I'm targeting up here. It almost feels like I'm drawing out like a American football type of game plan. Just kind of putting it out there. See if it works, see if it plays. Let's zoom into the lower time frames. Standard 4-hour chart, still have the same markings, same liquidity zones that I'm looking for. I'm going to bring the volume profile back into play on this chart. So that's an anchored volume profile of this range. And as postulated before, we have a potential a bank that was transacting here, or a large liquidity provider that gave us the three-phase market cycle. 1, 2, 3. Maximum liquidity. This is the game they play. And if that holds true, this large point of control of that range may see resistance. Might break above it a little bit to grab that liquidity on a wick and then close back below it. That would be indicative that whoever's transacting here may want to go lower. Or maybe they just want to have a reaction there, come back down to previous supports, fill this little inefficiency in the market right there, and then resume upward. So if you get a sell here into a higher low, being a higher high, higher low from that area on lower time frames, could give you your entry at previous support. Stop loss ultimately, if you want to catch the falling knife going there, stop loss is there. Break that stop loss, we're going for the 49,000 stop loss. And the market requires lower liquidity. So it might just keep stopping out longs for the next 2 or 3 months, and that would be the slightly sideways to bearish pattern that brings us into a mid-cycle of this 4-year cycle sometime in November. So we'll see if this wick gets broken there. We're either going to capitulate down or time capitulation for 2 months of sideways again. So I'm going to have to keep trading it back and forth. Still, like I said, valid sell setup around this area after taking these liquidities. Stop loss will go up here. Maybe you get into a higher low. If you want to buy that, stop loss goes down here. Keep it simple. Don't make any rational decisions. Don't chase candles. Have a plan before entering the market. And keep in mind that you don't have a trade. You do not have a trade set up if you do not have invalidation. If you don't have a stop loss, you don't have a trade. My stop loss is definitely down at this area, because we look at the trend that is going down here, and this current move up right here doesn't match anything else in this area. It's too long. As I was saying in the last video, you may want to wait for that leg to invalidate, because this can be A, B, C. And that white leg would have come up to here. Then you get this move down from there, and then take that liquidity again. That didn't happen, so happy days there. And now we have this being a primary leg in a new trend. How far does that trend go? We will see. You might just get an ABC up to here and then reject. But because this current leg up doesn't match anything previous, I see it as something new. It could be repeating this, just come up here and grab liquidity, or something a little more shallow. I definitely would like to see this wick broken, because as soon as this area is broken, that's the market telling me that it wants this upper liquidity at least, and come into this resistance zone that we marked off in the last video. So looking for buy setups out of this, and then some kind of leg to complete somehow. Definitely to take these profits, to take these liquidities, that's a profit zone, and then maybe load back up around here. For those of you that follow the CME chart for those gaps, there is a gap way down here. So maybe the market does want to pop up, sharply reject, and then continue up. Or this gap stays open, so that when people get up here, they're like, oh, I have to short it there because there's a gap down there. And then they keep squeezing shorts for the next month or so. And these shorts stay trapped. And they will be liquidity for pushing price up. Because as the shorts exit their positions, that's an immediate buy pressure on the market. And the more pain that can be pushed into them, the more they want to exit, and the more this can really ramp up. But yeah, just trading trend, you definitely want to see this close up here at previous resistances. It is a sell setup, but you may just come into a higher low, leave those shorts alone, don't let them exit, and it'll be a quick sharp move down into previous support and then break up. Something to watch for sure. We will see what we get. I hope all that was helpful. This video is already getting a little too long, and hopefully I have time to do an S&P 500 video update in gold. It's on my schedule to do, and hopefully I get to it soon. So like, comment, subscribe, leave comments and stuff, and ask questions. Yeah, do your worst, guys.